GM. Welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, and I believe that Friend.tech is not going to change the world. That's why I'm carving a path for doers to confidently build and not invest in some areas of Web3. Welcome back. It's another episode. Today we are talking about Friend.tech. We've got Kyle on the show, and we've got Herbie, who is a leading NFT trader, just been in the space since 2021, really gets it. He's worked for some top projects. He's worked at Blur. He's worked at DeSo, where he worked on social tokens. So he really has seen what Friend.tech is what DeSo initially was back in the day. And so we talk about that. We really dive into the question of like whether Friend.tech is it pump and dump or is it legit? Is this something that's here to stay? And the conversation revolves not really so much around whether Friend.tech is here to stay. It's more of a question of like, what are they doing right now that is going to lead to long-term sustainability? Because right now they've absolutely exploded, and we get into the numbers and how successful they've been and the millions of dollars that they've generated in fees, and then the millions of dollars they have locked in their contract because all of the money that's been invested in shares of Friends. And we also talk about, if you don't even know what Friend.tech is, this episode is going to break that down for you too, so you understand really what is Friend.tech. And at the end, we're going to talk about, should you get involved? Is this an opportunity that you should be capitalizing on? Or is this a hype cycle, sirens going off? We watch out, avoid this. We're going to let you know. So stick around to the end. Really great episode. Before we jump in, let's just take a minute to hear from our sponsors. Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. Herbie, what's going on, my man? Welcome to Web3 Academy. So excited to have you on the show today.
Hey guys, thank you for having me. Excited to be here.
Another fellow Canadian on the show. We've been bullish on Canadians in crypto these days. This is like 3 or 4 weeks, not in a row, but almost, that we've had Canadians. So excited to have you today. We're talking all about Friend.tech. Is it a pump and dump, or is it legit? Is this thing going to the moon? Are we all going to be buying Friend stocks or Friend shares, whatever we're calling them? Before we jump into opinions, Herbie, you're quite active in the space and active in Friend.tech. Can you explain it for people who don't know what it is, for people who haven't used it, although I feel like you probably have to live under a rock to not be aware of what Friend.tech is right now. We did put out a newsletter last week about it as well, but in your own words, what is Friend.tech?
Yeah, so the simplest way that I at least try to think about it is a way that anybody can effectively purchase access to a private group of a specific creator. And then with that access, you effectively own a share, which can then be speculated on. So there is the utility of having access to this group, such as a person like Kobe, who's a prominent Twitter figure. Then there's also the aspect of trading it and potentially trying to speculate and monetize on the value of this creator or the value of, that they will provide to the holders in that private chat for the group itself.
I like that you focused on the actual utility of it rather than say, I think most people would describe it as like speculating on your friends, basically, and buying shares in your friends. But the way you describe it is great. It's true. You are buying access to them. I have access to Kyle because I bought his shares. I asked him to send me nudes. He didn't. So then I sold his shares and now I'm out.
Smart.
I didn't get what I wanted for my access.
Yeah.
Made
yeah,
a
that's
great
my,
profit though.
that's
I
my
did make a profit. Yeah, I did make first time I've profited off of a token in a while.
That's funny. One side of this is definitely profiting is Friend.tech. Like they're making a killing. I saw that they made like $4 or $5 million and just on trading fees, but taking a portion of every transaction. And it's funny to me. Like the bigger question is, you just mentioned like where is this going? Is it just a pump and dump, or does it have real value? And the reason why I try to have that like product like value proposition to the user focused approach is that that's what people will eventually do, because eventually token incentives run out, and what is left. And that is what people, will stay for. And that is what will give something longevity or not.
Well, and to give some context, so there's been 1,573 ETH that's been generated from protocol fees. So that's straight to Friend.tech. And then in terms of numbers, this weekend, just things went crazy on Friend.tech. So it launched on, I think, August was the 10th or something like that. And then up until like Friday, it hit about 30,000 users. And then in the last 2 days, it's gone from 30,000 up to 79,000. So like, it's just like the curve on this thing is just went crazy. And then like even transactions was at about less than 1,000 a day. It reached a total of 398,000 as of Friday. And then in the last 2 days, all of a sudden the cumulative amount is 1.35 million. So like this thing is now doing like, let's see, 20,000, 30,000 transactions a day out of nowhere.
Yeah.
Or actually not even a day. This is by hour. This is hourly. That's hourly. 30,000 transactions hourly. I was like, that math doesn't add up. So like this thing's going crazy at the moment.
It reminds me a lot of BitClout. I mean, it's very, very similar. It's the same like bonding curve structure of how the tokens are emitted, effectively bringing in people's price. A lot of similarities to Twitter. There are some differences. This might be a spicy take, but I actually think that BitClout did it better. At least in some ways, they did things better and had more like overall, not as like direct of a private utility, but as far as for speculating on true social tokens and people's value and what that means, I think that BitClout was a very interesting approach to that. And Friend.tech is a little bit more, definitely still has like very strong incentives for sharing, as we're seeing, because now with this speculative airdrop, people want to share their token. They don't know, like, if I'm going to get money by people trading my shares, by buying people's shares, by inviting people. So there's this huge surge now of this, machine that is running for people to share this app, share this product. Then frankly is like pretty clunky. Like nobody really knows that much about the utility or if people are going to use it ongoing, but it's the same as like, farming the next like meme coin to me right now. It's like just value is there, attention is there, and people are trying to capture it, get their share of it. And then I guess in the back end, we'll see what sticks.
Can you just walk us through BitClout for a second? A lot of our listeners are newer. They came in the last cycle, and so probably missed some of what BitClout was, which to me seems I was around for that too. And it's very similar. Big difference to me. Well, I'll let you explain, then we can talk about it afterwards.
Yeah, BitClout's effectively a decentralized Twitter. And so what that means is every time that you make a post on Twitter, it goes into Twitter's database. Every time you get followers, your social graph is owned by Twitter. Deso was an approach where you own your own follower graph, you own your own posts that you make, and you can do things like, creating NFTs, having a tipping system that's involved for every single thing you post. So it's a much more like monetized social experience, similar, that's like broadly accessible in the same way as Twitter. And then people can buy shares, like very, very similar to Friend.tech, of each creator on the BitClout platform. So now it's called Deso. It's rebranded to Deso, and they're still kicking. I think it's been tough for them to gain adoption. Obviously, is like building a social network from scratch is incredibly difficult. But that's kind of
It's similar to Lens protocol, except for the fact that you can speculate on the creators. So it's kind of like a Friend.tech plus Lens protocol in one. But when BitClout first came out, it was basically just Friend.tech. Like you could only speculate on creators. I don't think you could really. I don't think it was a full Web3 network at the time when it first launched. As far as I remember, maybe I'm wrong about that. Do you know?
I worked with them a while after they launched, and they became Deso. But I'm trying to remember if when they initially launched, if they had a feed that was similar to Twitter, or if it was just like creator token prices.
Basically just creator token prices. But the difference from BitClout to Deso BitClout to Friend.tech is Friend.tech, you don't get the liquidity as the creator, whereas on BitClout, you could. And so what happened was, and the reason they've rebranded is because a lot of the creators would just go on there, they tell a bunch of Twitter people, like their followers, to go and buy it, and then a bunch of them would go buy it, and then the creator could just rug it all and take all that liquidity. And it kept happening and happening. And so I was like, hey, BitClout's a scam. And so it kind of lost credibility. And then I think they switched their name, and they've actually built something that's pretty decent as a result of it, which is cool. And so like maybe Friend.tech, I think that's why we're having this conversation today, is a lot of people are pumped about Friend.tech. A lot of people are like, hey, this thing's a scam and it's a piece of shit. But I mean, BitClout was kind of that in the beginning, and now it's building something legit. And so the question is like, does Friend.tech do something similar? I don't know. It's got the traction. Well, it's starting to get the traction anyway.
BitClout also was like, they raised $200 million from Andreessen, like, or around, I think they raised in Bitcoin. Wow. So the $200 million number may be a little bit inflated from what they actually raised. But like, they had the who's who of VC, in their round, and raised a ton of money. They're a very, very hyped project. And I feel like people want to have some aspect of like decentralized social to work. And I'm really rooting for it. I have a story that I can tell you guys after of why I'm not a huge fan of Web2 social, or at least the way that things are set up and the way that it's unfavorable to users. One difference between BitClout and Friend.tech is you can't really build the same network effects on an individual basis on Friend.tech as you can on BitClout. It would be more of like a Patreon type model, but then that also brings the question of like ongoing incentives for the creator and for the users, which we can talk about too, or like an OnlyFans model. Whereas BitClout, like anybody can access it. If I follow, just like I can follow Elon Musk on Twitter, I can access it. So you can get 1 million followers on Twitter, on BitClout, etc. But the way that the share structure is priced, you can probably only reasonably get like a few hundred, maybe 1,000 people in a Friend.tech group before it's like 6-7 figures for somebody to join, and then it's completely inaccessible, which there is a market for, but it's not going to onboard 1 billion people, at least I don't think so.
That's what I tweeted out this morning. Is the problem is, so there's a bonding curve to listeners that aren't on Friend.tech yet. There's a bonding curve where basically each person that buys a share, the price of the shares then go up each time. And so like the leaders right now have 150 holders, and to buy a share, it's like 2.5 ETH, right? So it's like $5,000 almost to buy a share, just one share of a creator, which is like, that's not a scalable thing. And that's only 150 holders, right? So like you can only get 150 followers and you're done. Like obviously some can go more, but you're getting real dangerous buying some random, share in some random app where you don't even control the funds. Like I would not ever be spending 2.5 ETH on anything in this app, at least not anytime soon. So it definitely limits the scalability, which is one thing that I think is a red flag, I think, of this app right now, or at least the setup of it.
Yeah, it reminds me of like paid alpha groups, right? Like a lot of people, especially in the NFT space, created paid alpha groups where they auctioned off or they sold 100, 300, 500 passes. A lot of them were scams. A lot of them, were like worthless. But some people had like legitimate alpha and people paid for it. And it's a similar vibe as this. Like you get a private feed to somebody who can share their meme coin picks or share their NFT picks or, their macro analysis, whatever it is, before they send it on Twitter. And I think that does have value. Like I don't want to discredit the platform. I believe that there can be a future where at least some people build valuable private chats and people are willing to pay 5, 10, 20, even 100K. I wouldn't be shocked to see it as like the next massive consumer Web3 app that takes us to the world. I struggle seeing that future, but I can see like a good business model for Friend.tech that does unfold, at least for a small amount of creators who are that same group that's willing to create like a paid alpha group and invest time in it, etc.
But why would you do that on Friend.tech when you can just go do that on Discord or in Slack or in Telegram? Like those already exist, right? And if you do it in one of those platforms, you can set the price, you lose the share model, but the speculation of the bond curve is almost a bad thing because you now can't control your product. You're at the mercy of the market, which like we've seen so many NFT projects struggle so much because they're so, I don't want to go down the DeGods path, but like Liam or Herbie have talked tons about DeGods and how much of a ride they've been on because of their floor price, and it's just screwing their ability to build a business. So I struggle with that.
Yeah, agreed. Because it's like you don't get to control the price, which sucks. And so like it limits the amount of users that can come in. You also don't get to control the features. Like right now, the chat is kind of like shit. Like it's like I can speak to every one of my shareholders, but if they speak, only I can see their response, but the others don't see their response, which is not a great tool for building community by any means. For example, we have a paywalled like community, Jay and I, right, with Web3 Academy for pro members. Now they pay like a monthly subscription. They get other things like a newsletter. They get events like video calls with us, but they have a private chat in Discord that's token gated. So it's like somewhat of a similar idea, except we get to control the price. And so we can be unlimited. We have more than 150 people in there and it's still only $18 a month. You know, now if we did it this way with Friend.tech, it would cost you $5,000 to get in here, which is just kind of crazy. Now, I guess you own the share, so you could always sell it at any point and get out. But I don't know. To me, it's not a scalable thing for sure.
Then it becomes about speculation and not about actual value delivered. I believe that was one of the fundamental problems with NFTs last cycle is all the rewards and incentives were front loaded for creators. And if we just use basically any project, it mints out, creator raises $1 million, then they get, a tiny little drop of royalties on an ongoing basis that are now disappearing on transaction volume. That's pretty much it. And they can't raise money anymore unless they sell more NFTs, dilute their brand, and risk the entire thing collapsing. So I think that model is kind of played out. And the future really has to be, in my mind, like ongoing revenue. And whether it's through a typical, Web 2, subscribe model that is like OnlyFans or that is like Patreon or like what you guys are doing, or if it's something that's more innovative like a Harburger tax, which I'm not sure if you guys are familiar with, which is basically like you can, what's his name? I'm forgetting. Anyways, I'll try to explain it. It's a little bit complex, but basically you have to set a price that anybody can buy your asset on at a specific time. So if you were to buy, let's say Kobe wants 100 people in his Friend.tech group, and sells off 100 NFTs, people buy it. Once those people buy it, they have to set a sale price that they're willing to sell that asset for. And then based on that sale price, they pay a percentage in tax to the creator on a yearly basis. So an example could be Kobe sells out 100 things for 1 ETH each, right? Then people can set their share price, let's say 5 ETH, 10 ETH, 100 ETH, whatever. But whatever you set it as, you have to pay like a 20% or 50% tax per se on a yearly basis to the creator. So if I set my price at 5 ETH, I have to pay Kobe 1 ETH per year, and anybody can buy it at 5 ETH at that time. And if somebody buys it, I lose my asset. So it's meant to create like a more efficient market that has some benefit for financial upside, but also gets creators paid. Obviously, it's more like confusing. The tools don't really exist for it today, but it could be a model that I see working. And I believe like Eric Wall and one other person, I'm forgetting their name, are trying this now. And it's frankly a model that I think could work, but obviously it's like confusing for most.
It's like a membership fee at golf courses. They do this, right? Like you got to pay a yearly fee just to get in thing. And a lot of like exclusive clubs and things do this. So it's similar to that. Yeah.
Exactly. Except you can't sell those, right? Like you leave that golf course, you leave that membership, you get nothing, right? You don't get anything back, even though you probably paid dues of like $40,000 up front.
Yeah.
Getting back to Friend.tech here, is their growth really just because of speculation? Like, do we really believe that 80,000 people who have signed up for Friend.tech have done this so that they can get access to a private group with whatever influencer?
I mean, no, definitely not. Just using the chat, it's, again, I commend the founders for building this and gaining adoption. What they've done is incredibly difficult and should be applauded because it's so hard to build anything in Web3, especially today as the market isn't quite as hot and there's not quite as much attention. So what they've done is incredible. I will say, I don't feel like many people are using it today for the sustainable, value-driven approach that has real longevity, which is these chats. Definitely some people are, and definitely there are some hot chats that people like and enjoy. But for the most part, everybody's token has value. Everything is being traded, speculated on. I'd say a very high majority of activity isn't authentic interest in the products, but more people gambling on shares, trying to farm the airdrop, etc. And that's not to say that Friend.tech won't work or Friend.tech is going to crash and burn. I think it's mostly just to say for people who are playing that game to temper expectations and don't conflate people who are speculators with real valuable users, because eventually the speculators will disappear and play a new game.
What do we know about the airdrop? Are you following that at all? Do you have any insight on what the airdrop might be, when it might come, why you might get tokens?
Yeah, if anybody has the ultra top secret insider scoop, my DMs are open. I'm always down to receive those kind of those kind of messages. But I don't have a ton of information. I believe it's 6 months they're releasing a token, and every week people earn points. We don't know officially what how those points will convert to the airdrop or how those points are allocated. From what I understand, I believe it's some combination of like share price, trading activity on your
invite. I think invite codes too.
And invites and potentially like message activity. I'm not sure, but those seem to be like the key vectors that people could earn from.
Right. In your mind, how do you feel about, you worked at Blur and you saw what using an airdrop as incentives to build a product, what that does. Do you think that this is a good approach for Friend.tech? What are the positives and the negatives of this?
The way that I think about startups is like you have to get to the next step and you have to survive at every layer. And it's a very dangerous game in crypto when you use financial incentives to like bootstrap activity on a product, because it's not real. It's going to disappear at some point, and that people are going to leave. People who are invested are going to have a bad experience and lose money. And we're seeing a little bit of that with Blur right now, where some people are like unhappy with Blur, unhappy with the token incentives, people willing to take NFT losses to earn this token, and the token drops, and then everybody's mad. And we're in that like pretty unhealthy cycle now with NFTs, and how much of that has to do with Blur or not is tough to objectively define. But I would say it definitely helps startups get to the next step. But it's very important if you lose the like trust and you lose the goodwill effectively with your users, because it just creates such a pump and dump, and everybody who actually cares about the product and everybody who actually uses it, those are the people end up getting hurt the most typically, especially when you can invest in something. Like the people who really believed in Blur and bought it at $1 and now it's trading, down 75%, that hurts. That's hard for that person, the person who is authentically trying to like market make on Blur to earn points and support the network, who has lost, 100K in trading, and then is going to get an airdrop that's worth 10 grand. That's hard. So I think it's a helpful game to get projects to the next step, but an extremely dangerous stage that can sacrifice longevity if the rewards are too heavily front loaded, which frankly, in my opinion, like 99% of crypto projects go too far.
Yeah, I think it's dangerous because it leads to so much speculation. So, okay, coming back to the initial question of the show, do you think that Friend.tech is pump and dump then, or do you feel like it's here to stay?
My honest answer is I think that the level of activity and interest that we're seeing around it isn't going to sustain. But I do think that we will see people who continue to use Friend.tech and build like communities on Friend.tech, and it to be like a healthy like niche, secondary, I guess, like way for creators to interact with their followers and audience. Do I think it's going to be the Web3 app that, brings crypto to the masses? Definitely not. But do I think that they could have a really good business and could create good opportunities for some creators? Yeah.
Kai, what do you think?
I don't think that it's a pump and dump in the sense that the team is Anon, so you never know. So I don't take my word on this, but I don't think they're going to rug everyone. The one thing that worries me is they have the ability to, because as I said, the creators don't have the liquidity, but Friend.tech does have all of the liquidity. Now, I haven't read their code, so I don't know if they have the backdoor or not, but likely there is a risk there that they could take just all the liquidity and screw everyone over. And it's a lot of liquidity. There's 13,250 ETH in there right now, which is something like $30 million. So I don't know for sure, but I'm pretty sure they could just walk away with all that, which is insane. To go back to do I think this thing is here to stay? I think the app itself sucks. I think the UX and onboarding, which everyone is going, I don't understand, but on Twitter, everyone's so pumped about it. It's this app might not be the future, but they're showing that we can have good UX and good onboarding in Web3. And I'm like, first of all, this thing's barely Web3. And the onboarding is still terrible. You have to bridge. You have to randomly send ETH from Base, if you even have ETH on Base, which most people don't because it's been around for a week. And then you just have to know to send it to some random wallet. It's not a good UX at all. And I think that this industry really needs to improve their expectations. It seems crazy to me that everyone's literally bowing to Friend.tech right now, saying that this is great UX. In my opinion, it's still terrible. But then I just think the longevity of this thing makes no sense. As we said with the numbers, the price point of the bond curve, it's not going to scale to a lot of people. I think 2.5 ETH is what the highest is right now for share. I don't know how high that goes. I'm sure it will surprise us and something will go, there'll be a share for like 20 ETH in a few weeks from now and we'll be like, what's happening? But I just think most of this activity is airdrop farmers. I mean, you can even, when you open up the app, the biggest button on the bottom right of this app says airdrop, which is just such a red flag. Like they're doing all the things that, like, I'm actually not even that impressed in their activity. I know people are getting excited. And even Herbie, you said like, they've done a good job of getting activity, but it's like, look, they've done exclusive invites, right? Which you do. And the way you start it is with high profile Twitter people. So Clubhouse did this before, right? If you make it exclusive, people want in, and then you airdrop from. So people want in, and then plus you can make money if you're in. So of course you're going to get a lot of activity. It's not that hard to do, to be completely fair, especially in crypto. I mean, one time we launched our profile account on Lens, and we said that if you follow us, you might get something. And we had 60,000 accounts follow us in the matter of like a weekend. They were all bots and like, they weren't real people. But like in terms of just getting activity, it's not that hard in crypto if you promise that people are going to make money. So like I'm not yet super like impressed by that. I think the one thing is if this team is smart and they don't rug, they've found a way to make money on chain, which is not an easy thing to do. That's the thing I'm most impressed with. I was like, they're making good coin here. And so they've already got investment from Paradigm. And then let's see how long they can get this speculative mania to continue for, because the longer this goes, the more money they make. And just like what happened with BitCloud is you might have a shit product in the beginning, but if you happen to find a way to make a bunch of money and your team is good, you can turn it into making something that's actually real, right? Whether it's through getting a big investment like you said BitCloud did, or just you make a bunch of money, kind of like Bored Ape Yacht Club has done, right? I don't know. If the team is good, like there's potential here because they have eyeballs and they have money. Well, they're making money. And once you make a bit of money, it's pretty easy to make more. So like what Friend.tech is today, I don't think is the app that makes it. It's not a sustainable thing. I think it's terrible UX. I think most of it sucks. It's got red flags written all over it, but they found a way to make money. So will Friend.tech version 2 or version 3 or something they make from it, that could be something. But honestly, most of the time that anyone does anything somewhat successful in Web3, they end up rugging anyway. So honestly, my odds are that they rug. That's my guess.
I don't think they're going to rug. Like, that's extreme. Like, the team raised from Paradigm, like, I'm guessing that they're a legit team and they had to dox themselves to Paradigm. Like, so I think that
there is a trend in Web3 of or non-doxed teams, like anon teams.
Yeah, it's true.
That there's red flags all over this app. So it's like, it's pretty sketch in that. I don't know if they'll rug, but this thing's going to have a bad fall. I can almost guarantee it. A bunch of people are going to lose money. That's my prediction.
For sure. Herbie, go ahead.
And I agree. I think the unanimous consensus, a lot of people will lose money at some point. We could leave it at that. Good for the team. Kudos to them. But I think at some point, it's highly probable a lot of people will lose a lot of money.
Mm-hmm. Mm-hmm. And
even if they succeed, like to a much greater degree than what they do today, just because the speculative engine is so strong and there's not much to latch onto today. Like crypto's pretty flat, other than obviously the 10-15% dip last week. NFTs are just like incredibly depressing. So there's meme coins, but even meme coins, it's kind of like you have to be a complete degenerate to really like, be hardcore in that scene and make money, and it's ruthless. So something like Friend.tech is a great time to launch, and they have attention, they're generating money, they're doing things that are really hard to do in the space. And again, applaud them for that, but it's easy to overshoot enthusiasm in the Web3 space we do it all the time.
What I would advise anybody to do is, I always believe in participating in new tech, right? So go ahead, jump into Friend.tech. If you don't have my shares, just send myself, Kyle, or Herbie a message. We get points if you use our code. So we'll gladly give you guys a code. But get in, and you can throw in $20 and you can play around. But any money you spend beyond that $20, spend it because you actually want to get access to that creator and you think it's worth their share price to get that access.
Or spend it knowing you're gambling. That's okay. If you want to gamble, that's fine. Instead of going to Vegas, just download Friend.tech and toss $5,000 on Kobe. See what happens if you really want. But just understand it might go away pretty quickly.
One like sneaky huge W that I think people aren't focusing on enough is this is a massive win for Base also. Yeah. Like this is the biggest social app that's been hosted on an L2, at least that I can recall off the top of my head. And Base is like not even 2 weeks old, and they're hosting this. And I'm very bullish on Base from a consumer app standpoint. The fact that they're getting this adoption while people don't think a coin is coming or think it's like improbable this is real. Like what's happening with the DK Mints and all these brands and, Friend.tech and whatever else is in the pipeline. To me, I see them as like the big winner out of all of this because they're just, boosting the activity on their chain, showing to other, startups like you should launch on Base instead of Poly or Arb or whatever it is. And then for big brands also, it's showing like, hey, we can handle like scale at least to some degree. Maybe not like, Disney scale, that's not necessarily or whatever proven yet, but this is a decent amount of scale and activity. And I think that Base has been like great, seamless as far as like the on-chain aspect of this has been really good.
We've pulled charts on Base's like revenues from trading fees, and then you can check out their expenses on how much they pay in gas to Ethereum. And the profit of Base since launching, which they've been around for 2 weeks now, maybe 2.5, is they're already over $2 million in profit in 2 weeks. And for context to that, Optimism, which launched in 2021, they're cumulative in total, they've made $9 million in profit. Base has just done that in 2.5 weeks. So like, and they're just getting started.
It's been 12 days. It hasn't even, they launched on August 9th, if I remember correctly.
Right. Yeah,
that's
right.
it. So people are excited. And I guess like the first week, it's probably boosted a little bit. But if people keep trying to build apps like Friend.tech, where they're generating hundreds of thousands of transactions, it's a huge amount of money that's going to go to Base and going to become like a very profitable revenue stream for Coinbase, where they want to continue, capturing this hardcore, crazy, crypto native DeFi audience and appeal to them. So out of all the things that I've seen in the last like year and a half come out of crypto, to me, Base is legitimately probably, if not the most promising, at least one of the most promising things for bringing this crazy, crypto Web3 scene to the masses. And Friend.tech is kind of, I think, maybe the first pitch or first inning of that journey that we're seeing.
Mm. Yeah, so I completely agree with that. I got a question for you guys. So we always talk about on the show that speculation is not sustainable, right? Like we were warning everyone with the NFT thing, like get out, like this thing's gonna blow up. Like a lot of things in crypto are just these like speculative bubbles. I'm starting to think that there is I don't know what size of people that just like speculation is utility for people. And it's like, we're never gonna get away from this. Like it always bothers me, but then I'm like, you know what? Maybe just people really like to speculate on things, and that number of people might be bigger than I imagine. And so it's like, maybe there are just going to be apps that exist, like social and user-friendly type apps that are just based on speculation trading. And that's just it. Like, that's just the utility. I don't know what you guys thought of that, but I've just been mulling that over the last few days. And it seems to me that that's probably going to be the case.
I'm with you on that fully, excuse me. I believe that the like financialization of opinions is going to be the next big step for social networks. And we've seen like everything is becoming effectively like more dopamine inducing, where you went from like, written text to images to now videos. And we're seeing gambling explode as it becomes more accessible. And we're seeing like more relevant forms of gambling explode to the average person, like sports betting and such. So I believe like an application like what Polymarket is doing, where you effectively create this like financial speculative layer on top of like real world trending viral events where you can bet on anything. For those who aren't familiar, you can effectively create like a betting market for anything. It could be the upcoming US election. It could be when like the submarine, story was happening, or the superconductor story. You create a bet of like, is this real or not? Is the person going to be alive or not? So
I just saw one before we got on here where you could bet, it was on chain, and you could bet if someone's plane was going to be delayed or not. And there was like a probability of it. You could bet on it. I was like, come on, this is hilarious.
Yeah. I mean, it's kind of funny. You could like hedge your own like potential plane delay. Like there's going to be like a $1,000 cost being late for the meeting. You can hedge and bet. I don't know. Like people probably won't do that, but it opens up an infinite world of possibilities of fun, like instantly accessible things. And Polymarket isn't that, in my opinion, isn't that like non-Web3 user-friendly. But I do believe that like speculation and these effective like, timed options that have an expiry date is going to be the future of speculation for the normal person. It's going to be massive. The problem with crypto markets is they're perpetual. They never end. Like even if everybody stops, using whatever, like Polygon or, like Dogecoin, whatever it is, that market is still going to exist forever, and people are going to get hurt forever, and it's going to leave a really bad taste in their mouth. If you place a bet on whether the, submarine person is going to be discovered by X date, it expires in 2 weeks, and it's like a progressive rise in dopamine as that happens. And then the event ends, and it's like, okay, I know it's done now. Not thinking in the back of my head, like, should I sell my Dogecoin? Should I not? Should I buy next cycle? Whatever. It's just like very easy, easily accessible, easily understandable for like normal people. And like, the game that you're playing in, the rules that you're playing in, and you know what you're going to lose, what you can win. So I'm very, very excited about that future, of speculation as a utility, if that makes sense.
Imagine that's the one thing that blockchain brought, and that's it. It's just the ability it removes friction to bet on anything in the world. One of the things that I was thinking about over the weekend as well, I don't know if you guys have heard of Telegram bots yet. So these like Udabot and others. Basically what this is although it seems like it's this degen-y thing, it's actually a massive breakthrough, I think, for this space. So a Telegram bot is basically, you set up this bot where you basically say like a couple words and you can invest in a token. So I could be like, I don't exactly know how it fully works, but it's easy enough that you basically just say like uni, $5, whatever, and then it just like goes and the bot just like goes and buys it for you basically. And it removes all of that friction of like connect your wallet, open up Uniswap, trade, sign 3 times. Like it gets rid of all that, and it's just a message inside of Telegram, and it just like buys a token for you. So that's a pretty big deal for degens, people trading. Okay, so that's cool. The other thing I think of like when I go back to Friend.tech is, and you mentioned it, Herbie, is that like I think the ability to speculate or buy equity in people is going to be a really big thing, whether that's opinions or that's access or that's just like, a musician's career or whatever. Like I think social tokens is going to be a really big thing. We've been saying that for years. I don't know when that comes, but like Friend.tech is kind of that, but just not fully. But I think when you have the ability to like invest in anything, whether that's social tokens or like you said, your flight or whatever, and then you have these bots where in Telegram you can do it with one text basically, like it's going to be just so easy to buy anything. You just talk to someone and someone's like, this person said this cool thing, and you're like, sick, I'm going to buy 2 shares, right? And you do it all in your Telegram app. That's going to be just nuts when that happens. And I think Friend.tech is a kind of like an introductory to that. I don't think that's the app that we all use, but it's that plus these Telegram bots are going to be a wild thing in the future. And I think the younger kids are going to just love that. It's going to be native to them and normal. We'll still think it's probably weird, or people older than us, but like, I mean, Herbie, you're probably pretty young. I think you just got out of school not so long ago. So this is probably like very native to you and normal. Whereas like if I talk to my parents, they're like, what the heck are you talking about, right? So I can see it being a big thing.
Me too. With the thing you mentioned, like Friend.tech, I really do believe that like isolated instances are much easier for people to understand than like holistic investments in companies, coins, and people, if that makes sense, because the amount of like compute power it takes to factor in all the variables or even consider all the variables you need to factor in on like whether I should invest in Kobe's share is a lot harder than saying like, do I think that Dylan Dennis's like tweet, or do I think he's going to tweet photos of like Logan Paul's, fiance, like 5 or more photos of Logan Paul's fiance today? You know what I mean? It's just so much easier. And if you're like bullish on Dylan Dennis being like the best internet troll, you could be like, yeah, I think he's going to. I think he's going to keep going hard, right? So it's like fun, infinite stream of experiences. Whereas like the Dylan Dennis coin is maybe like a little bit less exciting, a little bit more complex. I'm basically like very long, like smooth brain, left curve simplicity on crypto apps. And I think that that's our future, to be honest. Like every single evolution of crypto has been simpler than the last, more degenerate than the last. Like a lot of DeFi people missed NFTs because they're like, these are stupid monkey photos. And a lot of NFT people are going to miss whatever the next big thing is because they're like, this is so dumb. Like at least my NFTs, mean something or have a team behind them or whatever it is. They'll have like the general thought process, not just like, oh, this is fun. Like I want to do this.
I think you're right. And I'm so not excited for that world that something dumber than NFTs, than monkey NFTs is going to be bigger. It's going to be the next thing. You're probably right on that. Fuck.
It's so scary to me because gambling, it's like the worst addiction possible, right? Mm-hmm. Because if you win, you get the ultimate dopamine rush, right? And you must come back and do it again. If you lose, you still get the dopamine because there's so much energy and excitement, but you also get the down, which you can only fill by gambling again, right? By jumping back in. So it's scary to me that is where we're going, because I think you're right. That is where we're headed. I get excited about social tokens, not from the financial side of them, but more from the membership and access side, because it's really exciting to think about whether it's a influencer or a sports team or a musician. We all have had those people where musician is probably the one that everyone can relate to, where you're like, oh, have you heard this band? And you're like, yeah, I saw them first. I was early. We want to celebrate that, and we want to be able to show that off, and maybe we get access to something because of that. I don't necessarily know that we should get financial gain from that. But if we get extra access, we get to buy their tickets to their concert first next time, and we don't have to compete with all the bots. Like, that gets me or we get into a community where we can meet other fans. Like, that stuff gets me super excited more than the financial side of it.
See, that's how you can tell we're the older ones, Jay. And we're like, yeah, real utility. He's like, no, fuck that, monkey JPEGs. And
whatever's dumber than monkey JPEG. If it's not as dumb as monkey JPEGs, I mean,
you're not
no, I actually agree with you, but I believe that it'll be a different mechanism that will be realized through the way that the ultimate utility for NFTs that I see is just basically a better way to store data of like different experiences that you have, like digitally native experiences. Mm-hmm. And at their core, it's just like a mutable digital receipt of X, and that X can be anything.
Exactly.
It proves that you own this thing, proves that you have this thing. And we view NFTs of like, 100K monkey photos, and it seems kind of like crazy that that's just what it is, but it just proves that you own that thing. It's just really a receipt of ownership, certificate. So I think that the future of NFTs is much more likely that favorite band that you went to early, you will have that ticket in your wallet. And if you go see them like 5 of their first concerts, they could do something to say, everybody who holds these, everybody who holds 5 or more tickets from our first from our first tour, everybody who has a ticket from our first tour gets 20% off our most recent one. And I see that as a potentially like easier to understand mechanism of rewarding people in a social token-esque type way without having a liquid token and directly associated with it.
Well, and this is also why I don't love what Friend.tech is building out, because I love the ability of, like you said, it's a receipt, right? And receipt could be as an NFT, could also be as a fungible token. You can do either way with it. But then you can take that receipt and go to any other application on the internet that allows you to connect your wallet and give access, create an experience, whatever. And on Friend.tech, these aren't real tokens, right? They're like points or whatever, but you can't go and then they're not in your wallet, and then you can't go and take them and get an experience elsewhere, which that would have been really cool. Now, there are people, I don't know if you've seen Fubar and someone else. So Fubar made this contract where you could take your shares and tokenize them through an easy like UX kind of thing. You just put your address in, and then boom, it mints all the tokens. And now people can buy and trade them on Uniswap instead of in Friend.tech. And he took like a % fee, and then someone forked his thing and removed his fee. And now you can so like they're actually
so Web3 of them.
right now Friend.tech shares are being tokenized, which is actually better in my opinion, because now you can do things with it, right? So like now you have the real open permissionless concept where you can take those shares that are tokenized and give access to anything. That I'm actually kind of bullish on. But points in Friend.tech, I don't see that as the future.
I hear you. I mean, one important point that you guys brought up earlier is I do believe the utility model will be based on people paying money for things and then receiving things in backside, not like I bought your token or I bought your Friend.tech share and I expect like utility in perpetuity. The model doesn't scale. Like there's just no incentive for creators to continue doing it. So I do believe like the rewards that, followers, fans, audience, whatever you want to categorize it as, will get in the future will be based on financial investment viewed as an expense in the past.
Yeah, I can see that.
Yeah. There's a reason why everybody knows Patreon and OnlyFans in the Web 2 world, because those business models work. And Substack, like all these subscription-based business models, they work. And we are starting to have that in Web 3. But initially in Web 3, all we had was 10,000 collection NFT, go ahead, buy it. And now I have to figure out how to turn that into a business, which is why most of those businesses have failed. Okay, I want to wrap here because we're almost at time. But Herbie, I got to ask, you're just an absolute savant with your threads on Twitter showing off how NFT, it's actually really refreshing, how NFT traders have actually made money and made a lot of money when so many of us have not. Are you buying right now? What are you buying, or what's your current view on the NFT market and any advice you would share to our listeners?
I'm very slowly connecting things that I love, which I don't care much about the price that I can afford. I'm probably putting like maybe 2% of my net worth in NFTs that I'm just like, I wanted a crypto dick butt. I saw one that I liked. I'm like, I'm buying this. I want a dick butt. I don't care. I don't care if it goes down 50%. It has a flamethrower. It has a cannon dick. I'm like, this thing is awesome. It's maybe going to go up my wall one day, depending on what my future spouse will say. But so that's the type of collecting I'm doing today. And we talked a little bit about like the left curve side of things, moving left to the left curve. To me, I think that the NFTs today that actually give people like emotional enjoyment and that don't have future expectation of returns, those are the best bets you can make, because attention is going to keep flowing to those like, memes, narratives, whatever you want to call it. And they don't have the same like debt as typical projects. Every utility project like DGods, what happened is they had so much like anticipation debt in effect, like loaded up in their users, that nothing they could do could ever reach like the amount that they owed, and they defaulted. And that I think every utility project is still kind of going through that same stage. So I like, dick buds, I like punks, I like art. That's the kind of stuff that I'm looking to collect now. I'm absolutely not looking to invest more in utility-based projects, because frankly, I just don't even know if these are ever going to be a thing again. And there will be games that won't have the same gag holders, won't have the same like, traumatic experiences that these holders have had, being down 90, 95%, and just play that and, you have a much better chance of getting 100x and won't have the same persisting sell pressure. So my idea now is like, I want to buy things that don't have to do anything, and I believe will still be very relevant in the decade, 2 decades, and then play whatever the next new Ponzi is, to be completely.
I love that. What a great strategy. I want to buy the dumbest things. That's my strategy, and it's going to work too. I mean, every cycle it's worked, right? Shiba and Dogecoin, like these are it. This is, if you get in those memes, they work. It's weird.
Yeah. I mean, I'll buy the things that'll survive, I believe, across cycles, closer to the bottom. And I don't need to pick the bottom. I think we're getting closer now. But there will be stupid new fun games that everybody plays. And NFTs look like the dumbest thing in the world back in, early 2021. And then, by early 2022, everybody was hypothesizing about how they're going to take over the world. So I want to view my crypto experience like I have fun, hopefully can, make some money trading. Hopefully people don't get too wrecked, and, just view it from that lens, if that makes sense. And select things I like along the way.
I mean, it's great advice. I think like, collect things that you like. Don't collect things that you expect to make money off of right now, because it's just, who knows what happened. It's way, way too unpredictable. Last question, Herbie. It's a question we ask all of our guests. If you had a billboard that 1 billion people were going to see, what would you write on it?
Okay, so I have a generic answer, and then like that I've been working through in my own life, and then probably a little bit more original answer. The generic answer that's been the most impactful thing for me is like head towards things that like are scary to me, that I'm afraid of. And I find that when you tackle things that you're afraid of, it's like your life gets like so much better. And when you're hiding on your computer for 12 hours a day being an NFT degen, it's easy to like, in between Twitter and Discord to just go to easy things. So I think that's a good message. And the other one I would say, which is on that same vein, is whatever like persisting thoughts you have that you think will be like judged externally, or you think that it won't be socially accepted, to like explore those thoughts instead of dismissing them. That's one of the things that led me to NFTs early. That's one of the things that has helped me create like healthy, health habits and such that are very like unconventional against the brain, that make my life much better. So oftentimes like those things are hiding behind that fear of, like being socially unaccepted or whatever it may be. If you have persisting thoughts for something, to explore them, especially if they are like not very socially accepted.
Mm-hmm. Mm-hmm. Yeah, I think that's like, listen to your instincts or trust your gut. Like we all have those consistent thoughts that we push down and we suppress them because we're afraid of judgment. So great message. Herbie, great to have you on the show, my man. It's been an absolute pleasure. Appreciate your time. Whenever you launch your next project, which I know you're working on, we didn't talk about it today because it's top secret, but whenever you do, would love to have you back on.
Man, I would love to jam with you guys. When you guys are in Toronto, we gotta hang out whenever you're next. You guys are cool. Cool, dude. So let's stay in touch.
Hey, Kai, we're cool, man. Look at that. Hey? Thanks so much for listening in, everybody. Have a great day.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.